Hi, my name is Felix Frey.
And I'm ARKK.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Well, hello there.
Marco, how are you, man?
Good. How are you?
Can you hear me okay?
I can hear you well.
All right, good. What's cooking today?
What's
Did you
cooking?
see the news? Did you see the?
Yes.
Did you see a news that we talked about? We've been talking about for the last 2 months, the TLTs and bonds and everything else. It turns out this is actually pretty cool. So it turns out that Morgan Stanley issued a paper yesterday telling the world that they figured out who the seller was in bonds. Okay. So all this time, let's just think back for the last month and a half, 6 weeks, we've been talking about bonds coming down, 5 weeks talking about bonds coming down. And all of a sudden, Morgan Stanley comes out and says, you know what? We figured it out. It's actually the commercial banks in Japan. That's it. Then the reason is, because then you think, okay, why? Like maybe they know something. The reason is that they had to do a rebalance. Okay, they were long so many U.S. Treasuries, and they didn't need the income from the dividend in U.S. Treasury because it wasn't even that much. But it was this rebalance within the commercial banks. So this is what I've always been saying to you, and really helping you try to understand that the media and the news create stories on the direction of the market. And we have to think for ourselves and learn to think for ourselves as to, does that make sense? So perhaps, I'm not even sure now, but perhaps all this talk about inflation really stems from what? It stemmed from some of the price things, even though the number that came out today wasn't that hot. But, it stems from commodity prices going up, food prices going up, okay? But we talked about China was buying the commodities. They're just hoarding every commodity out there. We then said, okay, well, the bonds are indicating inflation, right? The bonds know everything. The bonds indicating inflation because interest rates are going up and bonds are getting crushed. So clearly the world thinks, hey, this is what's going on. But in reality, it was just Japanese commercial banks, some guy selling because he has to rebalance the whole Japanese commercial bank book. I mean, that to me is just shows you how, we have to dig and really make sense of what's actually happening. And when Powell says, I'm not really concerned about bond market, now it makes sense while he's not even concerned because he knows it's just some one guy in Japan pressing a button every day going, just sell. I need to sell this many bonds. And, Powell's probably called the prime minister and said, what are you guys doing? And the prime minister said, look, we just have to rebalance. And once that's done, we just got to get in order here. Okay. Maybe that's why he doesn't care. Maybe that's why he's just like, whatever. It's, we're worried about it. We're not so concerned about inflation, right? We're watching it. We're just not so concerned. And it goes back to what I've been trying to say, that it just doesn't make sense. Inflation, the inflation that they're worried about is when everyone is working, everyone is going to restaurants, everyone is buying, the roaring 20s are here, and, money is circulating, and the velocity of money, which we talked about, whether it was yesterday or the day before, the velocity of money was increasing. Right now, Powell and Yellen, they're scratching their head going, how are we going to get people to actually get out there and start spending money and really getting active and transacting? How are we going to do that? How are we going to do that when 100,000 restaurants closed over the last year? They're just trying to get back to even would be good for them. Right? You're going to get a jolt because the money's coming in and GDP and whatnot will have a jolt. But at the end of the day, they want to be able to step away and have the economy humming on its own. That's a long time down the road. And that's why he's sort of looking at the 2-year window and going, We don't know how it's going to work, and we're hoping and praying and crossing our fingers that this is going to work, and ultimately people will transact. But at the end of the day, it was a Japanese, some guy, might as well have been one guy just pressing a button, not even caring about what the news is or anything else, just saying, I need to sell this many bonds today. And tomorrow I'm going to sell the same amount until the new year in Japan is March 31st, which happens to coincide with, what we're doing, rebalancing on the other side of the world, which is maybe now buying bonds. So this bond selling has caused the rebalance on this side of the world where it's now bond buying. So you just might see the same actually move up. And, I just thought that was super interesting. I sent you the article when I read it yesterday. You should post that so people could actually see that and hear. I mean, basically, let's read it quickly here. Go to the top again. It basically says, recent weeks we're pointing out, just like we have, can you put a little bit high? Yeah, okay. Brief respite in the first week of March, selling in Tokyo session accelerated. So go further down. Basically gives you a great graph on what's been happening in the overnight sessions, right? And then it just goes in to describe how it's basically a reshuffling of a rebalancing in Japan. But he shows why, he gives you the reason, and it makes sense. And then you look at it and go, damn, that makes sense. Now that I can buy, right? Because at the end of the day, the only thing, we used to joke around on Wall Street, the only thing that moves the markets, when someone says, why is the market going up? There's just more buyers than sellers. That's it. Now, we can come up with 30 different reasons why that might be, but at the end of the day, more buyers than sellers. Why is it going down? More sellers than buyers. And in this case, with all the stories and all the primetime media that bonds have gotten in the last 4 weeks, at the end of the day, it was just that there was more sellers than buyers. Okay. Maybe it has nothing to do with inflation. Maybe it has nothing to do with, what's going to happen in the next 6-4 months. So you have 400 people on TV talking about what the bond market is indicating about future prices and inflation and how that means this. And every time the bond market does this, how about it's just some one guy pressing a button to sell bonds, and that's it. And he hasn't even looked at the news in the last 60 days because his sole job was to get out of this position.
Right. And who's even talking in the news about this? Is there anybody talking about it?
About this? No, they'll never. Yeah, they won't talk about that. It was just one guy. First of all, it's too simple. One, and two, they have to retract everything they took back for the last 2 months. And it was, it was good TV to say, oh my God, hyperinflation and the world is ending. And this, the world's going to end when the people, what they should be talking more about is Russia, China, and Iran combining together to create a new world currency. And then it's game over. Then you forget about hyperinflation. It's just nobody wants our bonds. And then interest rates go through the moon. And then it's literally game over. Again, this is a 20-year chess game, 5D, 3D, whatever you want to call it. It's impossible to know when that will happen, if that will happen. And before the U.S. gives up control of the world currency, they are going to war with someone, and they're going to blow up something, right? It's like a cranky kid, and doesn't get their way, and it's like you're going to take his last toy away. He's going to literally take his last toy, and he's going to chuck it, and he's going to break it, and you're like, why'd you do that? It's just because he's angry and he's not getting his way. That's the way it ends. That's just the way the world works. So anyway, I just thought this was a tremendous article. I think it's worth the read. It's quick. It's short. It just gives you reason that I actually think people could say, you know what? That actually makes sense. That there was a seller, and that's why bonds are down, not because of any other. Let's start with just that fact. There was a seller of billions and billions of dollars. So anyway, I think it's important to it leads to technical analysis. It leads to showing that price matters, that prices are moving, but trying to always figure out exactly why, you're hardly going to be able to do that. I mean, you're not going to do that with any confidence, 100% confidence all the time. It's just guess. But at the end of the day, sometimes the simple answer is the answer. Right. So again, good read. That's a good read. Look, I pull up a lot of zero hedge articles. Some of these articles are great reads. They're getting them from sources, and that's what makes zero hedge good. There's a lot of negativity in there. There is a lot of the world is ending. But if you can, cut through the weeds there and just pull out like real facts, if they find something, that's a real fact. There's a bond seller, and he's in Japan. That's it,
No,
right? So
now,
go ahead.
something I mean, I'm curious about this. So, back in the day when you were on Wall Street and you guys, I guess, were reading dozens of articles a day and watching the news and all this, like, how much grain of salt did you take? Like, how seriously did you take each and every news headline, every article? Did you have to think for yourself more than actually, the average investor who just follows what the media
It's a
says?
great question. Look, it's a great question. I think what I'm trying to teach everyone is to think for themselves. Forget about what I think. I can think about something. Forget about what I think. What do you think? What
Mhm.
makes sense to you? And then can you put some sort of facts to it, right? I read an article, and again, I'm asking myself, why am I reading this article? Who put this article in front of me? Why is it in front of me right now? How did I get to this? And then what are the facts within the article? Show me some facts. Show me something out of a quote. Even that could be, beefed up, but show me a quote that someone said, or show me a factual presentation that they've done. I'd like to see what for myself, because the translation is coming from the media, and maybe I might have a different look, or I might say something different. I mean, I'll give you an example. Here's another example, a perfect example. There was an article yesterday on the Postal Service.
Okay.
Okay, so the Postal Service was talking about Trump hired this guy, and they're going to revamp the Postal Service, and the Postal Service came out with this 10-year plan, how they were going to actually invest.
Mhm.
I think it was $40 billion over the next 10 years. They're going to get new EV trucks. They're going to get all new software. They're going to really revamp the whole thing, make sure people get paid well, and the whole nine. The one part that I read out of that was, how are they going to pay for that? You got to raise prices, right?
Right.
So who are the players in this logistics game that we talk about? U.S. Postal Service,
UPS,
UPS,
FedEx.
and FedEx. And so for me, what I see is I put myself as I own, let's just say I'm the CEO of UPS, so I'm the CEO of FedEx. One out of the three just announced they're going to invest $40 billion, and they got to make that money back. And so they're going to raise prices. So when I look at that article, I don't read necessarily about, I get USPS and what they're going to do. They're going to invest in EV trucks. That's already in the market, right? They had these contracts. They're going to put like $6 billion. That was with Workhorse and Nikola and all those names when they were hot. But I read, how are they going to do that? They can only do that by raising prices. They're going to they're going to need to compete in service, and so they're going to try to put it. But UPS and FedEx is so far ahead of the game that it's going to take time. But raising the prices, they're going to probably do that fairly quickly at the USPS, at the US Postal Service. And so come June, I think it's only a matter of time before you hear a big announcement where UPS and FedEx, they're just going to raise their prices. And you can't do anything about it. It is what it is. And, again, I go back to what's logical. If I'm the owner of UPS and FedEx, if I'm the CEO and I go to dinner with the other CEO and I say, you're the CEO of FedEx, and I say, aren't you sick and tired of these retail stocks are going through the roof? Everybody thinks that we do 80% of their business now,
Right.
and they pay us nothing. And we have to build everything that we've built over the last 40 years, planes, trucks, people, insurance, logistics, software, everything. We got to do all that to make 50 cents on every package while everybody's, making their valuations are going up huge. No, we are, in a way, we're a monopoly. Like, they have to come to us, or they can go to U.S. Postal Service, which, by the way, they're just raising their prices too. So if you're, I don't know, if I was the CEO, I'd be pissed off. If I'm, everybody's using my service. I'm not making that much money off of it. And it's because I'm competing. If you and I say, hey, let's just raise our prices 10%, what are they going to do? They're going to go to US Postal Service? That's not going to work. They'll come back. And so I think that these stocks are very well positioned to just make a simple announcement. That simple announcement can make these things jump pretty well. So when I see that article, it makes me say, okay, I can buy some UPS, even if it's just for a trade, until people figure it out, right? Until people say, in the morning you could have bought UPS flat, then it traded up $2. People figure it out as time, and people say, hey, if they're raising prices, everybody else is raising prices. So the translation of any article into an actionable trade, maybe it is a skill. Yes, it's a skill to be able to read something and say, well, what's it? But really, it's what I keep telling everybody, and it's connecting the dots. I spend a lot of time reading. I had to find that article first. That's first. I had to find that article. And then I had to put it together with all the other articles that I've been reading over the last, call it 3 months about everything. So, the way you get smarter in options is you get smarter in sort of good articles on what's going on the trends. And that's how you come up with good ideas or good thoughts. That's how you learn to think for yourself. How high can this go? I'm teaching you about the framework of the risk reward. Then I'm also showing you how to use the risk reward within the options. And then let's follow the trends. Let's see what's going on. I'm showing you where to look for the story, how to get the story, how to, figure out what he's saying. I mean, look, we haven't even talked about it today, but what was the story today? Intel, the CEO
I was just gonna
Intel
say
came out, right?
exactly. Yeah. CEO of
So how
Intel
did you
came
interpret
out.
that? How
Yeah,
did
I
you
mean,
interpret that?
I have a let's say good opinion about Intel. When I was buying my computer to do the stream, I chose an Intel processor because they're a long-standing company. I chose them over AMD, although AMD is hot, et cetera, et cetera. But these guys they're planning to build 2 chip plants in Arizona. They're also going to produce for other other companies. And there's this AMAT that just popped up today on the UOA, and I think they
Yes,
supply
AMAT.
stuff to produce these chips, which is
They
kind
do.
of when you
They're
start
like
connecting the dots.
yes.
And there's also this GM article they're forcing to cut production size because of the chip shortage. So
Yeah.
it all kind of added up.
So yes, I mean that's the way you're supposed to do it, right? Intel surprisingly, I mean, did you see the action in Intel today? It was not so good. I mean, they sold it off yesterday with the market, and then Intel today, it opened up and immediately was sold off. And
Mhm.
it's trading fairly weak. That said,
Can you just
it does.
reshare your screen? I can't see it for some reason.
Sorry, let me
It's
try
just
to
black.
reshare it here.
Okay,
Yeah.
sorry.
All right, let's try one more time. How about now?
See? All right, now you're good. Good.
Good. So Intel, I mean, this is disgusting. This is a rejection yesterday. This is good news that they're getting involved, and then this is another major rejection today. So for right now, this is not very positive. But we're at this level here, 62.91, which is trying to hold here. Breaks through, I think you'll find buyers right here to the 50. But more importantly, what they said was, yeah, they're going to try to help fix this chip shortage. So you look at something that is rocketing off of that, and you talk about this AMAT, which is supplies to these guys. So great chart, never went down like the other ones. And I mean, it looks pretty good. Here, we can frame it first. Let's get it to frame it. We're going to start by framing without even looking. I mean, I haven't looked at AMD in a very, very long time, but let's see. Let's go back. I just want to see 10 years first, just to see. Okay. That looks pretty damn good for 10 years. Let's see. 20 years, 19 years. Just go back through. Okay. So all-time highs. Okay. Except we just want to see the NASDAQ bubble, because this, I think, was around during the NASDAQ bubble. And it only goes back 20 years for me. All right. Let's go back 20 years, 11 months. Can we get there? Maybe. Okay. I mean, the thing looks tremendous here. So AMAT. Okay. So we have that. Let's just go back to 1 year. Okay. The pandemic, 1 year, 11 months. And we want to go to daily. I mean, look, sky's the limit here once it breaks out, right? We're on the left side of the mountain here, right? There's a mountain going on here. It's been in the last year, let's call it from 2020, around 50. It's for a normal name. This is a mountain, right? It's up 70 points in the last 5 months. If it breaks out here, we're looking at the interesting levels are going to be something like 90. Come over here, right? Somewhere right around there. Let's just call it 70. Okay, 70, 90, not perfect, 70, 90, 110. I mean, it's the top here. You see anything 70, 90, 110? See anything else?
Let's get to 130.
Maybe 130.
Yeah.
I don't know. I'm pretty good at patterns. I don't think you have to be good in patterns to sort of see that, but 130. So, something like that might happen here. I'm going to show you something here. We talked about, this was a price high, MACD high, price high, good enough to be a MACD high. price high, not a MACD high. So this was a diversion here. This was a MACD diversion, which would have me think, okay, this might be the top here. So it's coming down here. It doesn't. It holds. Okay. So yeah, I mean, you start shorting it probably right around here. You got to get, once it recoups, you got to get out of that short if you're trading this thing. And now it's going up to make a new high. And this new high could, the next new high would be, say, 96 to 124. That's 28 and 105, 106 is 133. So you're looking at sort of 133, 134 if it can get through this. But if it gets to 130 and then comes off again, then again, it's still a MACD diversion up here then. So it's got some work to do. I mean, it's been pretty strong. Today, the stock is bid. What are they doing now?
They're looking at these Aprils.
April, which ones? What do you got? April
135s.
April 135s in. Gotcha. Okay. I see something else, but I'm wondering if they're doing something over here. So, okay. So no spreads here. It looks like they came in the morning. Vols up a little bit. And stock came off in the morning. Okay. So 1042. Just take a look quickly. 45. All right. Let's look at time. So in the morning, they came in. This was only bid. They took the offer here. 166 was not the offer. Doesn't necessarily mean much. 44. I'm looking at IV. 44. 44, 45. 45. Okay. So it looks like they were a buyer. So it looks like they were a buyer of these. Looks like they're a buyer of these. I'm wondering this, though. Did they sell these to close at the same time? See here? I'm just wondering if this is plus 140. So it closed yesterday at about 42. And, you know, when the volume came in, let's just see a quicker version. 42, 41. Okay, maybe they're buying these as well. So it looks like, to me, it looks like they're buying both. Although I would have thought that maybe it was, if somebody was doing this, maybe it was like a 125, 135, 1x2. You see that 3,000, 6,000?
Yep.
That's what I thought of initially, but it looks like they're buying both. And this one was coming in a little bit earlier. So the 135 calls in AMAT, thinking, you know, if they're doing that, using that one, they're thinking 147, 47. I use 147 to give myself a little bit room above this art. This is flat. This is break even. This is risk reward break even. I need higher than that in order to actually buy these. So if I throw in 147, I get the pointer right here, which is the one they're buying. 147. It's a lot for. Is there earnings? There's not even earnings. So it's concerning here. I would think somebody might be. It's a weird one to buy, to be honest.
Right.
To be honest, that looks a little bit weird to buy, considering that this thing has consistently jumped 20 points, 20, 130. There should be some trouble. You have this news today, so the market's got to swallow that a little bit. But yeah, I would say that it's a pretty aggressive move. It's a pretty aggressive purchase. It could be someone. It could be someone that was buying. Could have been someone buying these and then selling a little bit of stock earlier today.
Right.
Okay. Could have been someone doing that. So that's what I would say about that. But I like it. I mean, I like this. This is obviously a very bullish chart. Again, it's up $50 in 4 months. You know, 5 months. It's not my cup of tea to start just reaching for another 20% move on the name. So I'd be a little nervous about that one.
Okay, fair enough.
Okay, good. That leads us to, you know, one name I would like to look, because I keep going back to it, and I am trying to find the right spot. Sorry. Let's go back here. AMD.
Yeah, it's been taking a
Look at this
beating.
AMD. I mean, Intel, AMD, okay, so Intel comes out. This is their big reveal. The CEO's making their announcement. MACD trading lower. Things are trading lower. This will take time for it. It shouldn't just go straight up and then go to the races. Like usually you need a little bit of time to get this to turn back a different way, right? You need a little bit more time. So I'm concerned. I'm concerned that this will need a little bit of time to buy options. And so I've been holding off. This held. So let's look at this here. All right, so we have clearly this is the big line. Okay, that's somebody holding the fort right there. So we need that to hold. But even if it was going to come back up, you see how this is turned. This is going to weigh on it a little bit because this is essentially telling you, that remember the box. I like this box now. We can keep showing this box. There was a lot of buying here. There was a lot of people thinking that it was going. This is where the call buying is. Najarian was talking about calls. There was calls here, calls here, calls here, calls here, and then eventually Intel announced somewhere around here that the new CEO is here and he speaks today. So with all of this volume up here trapped and the 50-day moving lower, and they're swallowing this Xilinx deal right now. It's a huge deal. I think it's a $50 billion deal. So they have a lot going on, on the upside, and anything that's going to move this stock up has to chew that out. So AMD might be maybe more of a second half story. So chips come back and AMD is still pretty good as a company. We like it, and it comes back. But right now, it just seems like the focus has been on Intel CEO here. But I'm constantly watching this to figure out, where do we take a shot? I'm just not sure. I'd like to get out of the, who knows when the shortage comes back. So that's AMD. Also, another one that I think has got a lot of potential. What am I doing? I keep messing up here. We've mentioned it before.
Yep.
I like Sony. I like it because, they have a lot of components within Sony that are doing well, or that they're fantasy stories within Sony. There's a lot of them, and some of them are very good. Like, for example, their EV business is actually pretty interesting, and they are one of the largest sellers of sensors in the world, of high-grade sensors. And I don't think a lot of people give them credit for that. So you see Volkswagen has made a new announcement. Stock adds enormous amount in market cap just because they have EV going on. These guys are one of the leaders in sensors, which is what every car is going to need if you have autonomous driving. And, even just in general, sensors are huge. So Sony's a big player there. I like them for that. I like them for this anime business that they have, which is like a Netflix of Japanese cartoons. It's gaining popularity in Asia and even in Europe. That's a great business. That's something that they bought from AT&T that they can build. The one thing that's a problem is that when you think of, so this is where you talk about perception versus reality. Reality is that they got a great business in different parts of Sony. But the perception is that Sony equals PlayStation. Right. And if Sony can't get the chips to push out their PlayStations by Christmas, Sony's going to trade 85, right? It's going to trade, you could say it's here 120 to 100. It's 20, 107. Call it 87, which gets you right back to the 100 day right here. Yeah, 85, 87. It could trade 85, 87 just simply because, you hear chip shortage, PlayStations aren't going to make it by Christmas. Sony's a disaster, sell it. Just because of that can take the stock down 15, 20%. So again, perception versus reality. At some point, that goes away. The shortages goes away and demand is obviously still there for PlayStation 5, and everything gets back to normal. And then you announce this whole EV initiative, the anime business, and everything else they're doing, which is pretty good. I mean, I looked at Sony and it was like, wow, I was starting to think back. This is like Sony back in the 90s when I used to buy everything Sony, and then I switched to Apple. So I think there's a lot to Sony. And again, it's timing here. And how long will it take for the market to sort of digest the chip shortage with PlayStation? That if PlayStation becomes normal, then Sony's going to rip. That's how I look at it. The question is, tell me when PlayStation, when the market thinks PlayStation will be normal, they'll make their demand in Christmas and they'll ship all the product, because that takes up a very large part of the market cap right now of Sony. Okay,
Yeah.
so there's your chips. Intel trades awful today. AMAT is trading well with upside call buying. AMD seems like in no man's land for a couple of months, and then Sony, something that I love, but again, no man's land. Nobody knows this when this chip shortage is going to end. TSM is another one that's being weighed down heavy today because Intel's coming after them. So there's a lot going on in the chips. Again, the demand is there, so you want to spend $1.9 billion on making U.S. a clean energy, you're going to need chips. You're going to need a lot of chips. And so that's something to consider, I think in the second half, that in the chips. But that leads us to the third story today. What's the third story today?
China.
Chinese ADRs. Do you see these things? China. Imploding last night, or imploding down a couple of percent. But, when you have these ADRs, I mean, the one thing that I saw on the UOA board was, ADS, NEO, China, Taiwan Semi, Asia, which is the Intel, PDD, XPEV, China, IQ, China, JD, China, LI, China, Tencent Music, China. You see the trend there? Baidu, China. And then we're going to talk about this FNKO, which is really interesting. But, that's China was doing poorly. Has been doing poorly in the last couple of sessions, but last night, especially, I think futures are again down. Maybe the Chinese government's not helping them out right here. They're trying to take some of the fluff off of what's going on there, but that affects the ADRs and it affects people who are long all these names and they're just blasting out of these things. But you're seeing a lot of put buying, call selling, adjustment of people who are long calls getting out of calls. PDD we talked about yesterday. They're coming back for calls. Yep. Which again, yesterday we highlighted that when you see, what scares me, I don't fall for it. What scares me is when you see this shaded area. So this is usually where the big guys are buying. This is usually where the hedge funds, they want to get their leverage. Okay, so 3,000, somebody might play 3. That looks like a call spread. Okay, but when I see call buying out here, okay, when I see call buying out here and activity out here, it makes me think that there's something else going on besides I'm buying calls because I think it's going to rocket. Because if you thought it was going to go to 160 or 175 or hit back to, let's call it this area over here, 175. If you thought it was going to go back to 175, then I don't know if you'd be buying the 155s, 150s, because on the way up, these things, first of all, you got 4 weeks. So you either have inside information that this is going to get bought out by somebody, or Baba says, all right, we'll buy these guys, or someone is actually getting out of their stock and just throwing a token out there to say, if it goes back up, at least I'm in it for the next 4 weeks. But right now, this thing is a disaster. So yesterday, call buying stock was, not so strong. And today you see it's a disaster and there's still call buying. It's not something that gives me a great confidence. Again, if they thought it was going to 175, they'd buy these. The 136s, maybe even go up to 137s when, buying the $1, 160s and stuff like that. This is not necessarily things that these guys are doing in general. So I give it pause, but they're buying upside calls in PDD while the stock is imploding. And if we look, we should, let's take one of these Chinese names. This looks like the wrong side of the mountain here. So again, it's going to get tough to trade. You have, to me, what's clear is, let's call it 70. This was a range that it had to break out. It broke out of that and then, traded around here, and it's broken that today, which is troubling, very troubling, right? This is the mountain here, and it's collapsed. It's done its dance here where it's, I would be looking at this one here. So 187, call it to 135 is 52. 52 from 172 approximately is 120. So it's getting close to that level where just on an ABC, it would actually it would land. However, you have this gap here. Okay, this gap was from the close right here, 110. So you could see a quick 124, 110 if tomorrow's another bad day and it's another day where they're selling. Okay, you could see a quick move. You can even see a quick move to 100. There's this compound. So what someone is what this is saying is this ABC from 185 down here going this and then doing this 1, 2, 3, breaking down 129. You start getting, this is one pattern, and then you start getting a break of the 130. That's just all new sellers that are just going to turn around and sell over here. So this could run into trouble. It needs to get back through 130 to sort of be,
Right.
with volume. So 130 through with volume, and then okay, I can make a case for 160, 170. But I mean, it needs volume, and you could see here that the volume is actually decent, 12 to 10 to 12 million shares, over the last, at least over the last 5 days.
Right.
Okay.
Yep.
So I would look at, all of these Chinese names. I mean, it takes us to another big one today with a lot of volume. NEO.
Yeah.
NEO's up there. Was number one on the board today, where people are trading a lot of volume here. And look, NEO is a very expensive stock, but it has a lot of potential because it's China, right? So you're talking about this level right around here. Okay, you're talking about this now level 32. You're talking about this just climbed. It was basically doing this 16. Let's call it right around here, 21-ish. Somewhere here. Let's call it 26-ish. And I mean, this was just a straight shot, really, from 20 to 30. And this is big volume straight shot, went all the way up here. This is on the other side here, almost looking like a reverse. I'm sorry, a head and shoulders. Although chartists might say, no, it's got to go back a little bit higher over here. But it's still weak. It's still rolling over here. The 50-day moving average rolling over. There's no reason why this can't trade 20s. There's just no reason it can't. We want to see buyers. We want to get those buyers to be pushing it up. We want to see this broken to the upside, 46. And then, what? I could say 32, 46, 14 plus, say it stops right here, gets us to 52. And then you're closing in on the 50-day. Remember, this 50 days starting to go down, and this is 50 days. It's hard to get that to start, trending back up. But the difference between 50 and 200 days, that's something that people look at too. That's really wide. So over the next 5 months, you might get this blue line, and this red line converging. So they'll be converging and until they get closer, and then you'll start seeing it turn. Okay, because after doing this for 6-7 months and pushing this 50-day up, this 200 is trying to catch up. And, maybe it hangs around literally, and this would be disastrous. And this is why we talk about how evil the market is on this side of the mountain. It could literally go from 25 to 45 for the next 5 months. It could easily do that and just squeeze. Volatility would come down. People buying calls, buying puts, buying calls, buying puts. Not gonna make that much money, or hardly make money. When you look at, let's take a look at even PDD, but let's look at NEO, because NEO is one that people have been trading a lot. It's not even 100 vol anymore. You see that we're back to like 80 vol. Think about that. Think about markets crashing. We're now down to 80 vol. It's the reverse that's happened. Okay, when you think about it, it's the reverse. It's a company that now has, again, we talked about the box. There's some value in NEO long term, for sure. It's China. They're the lead horse in China. So there's definitely some value. Maybe that value is 20 to 25. I don't know. But let's say it's 20 to 25. And then you got this whole 6-month group of sellers between 40 and 60. And, that's going to hold the stock from blasting off. So, and then you got NEO, which is probably right now $50 billion company. 45 billion. I don't even know what it is. I'm taking a guess. I'm going from memory where it was 60 billion. Let's see where it's at now. 60 billion. Okay, it's still 60 billion. So $60 billion company, and it's just harder and harder to move bigger cap companies. So this is something that I think is again, just framing it. Where can it go up? You're looking at 56 is a level, and then 66. 56 and 66, and is 46. So call it the 6 is 66, 56, 46, and now somewhere around 36. Okay, I think this low here from the other 2-3 weeks ago. Remember, this is a rejection. This right here is rejection on the way down. If it's trading down like this, down a little bit, down a little bit, sorry, down a little bit more, down a little bit, that's different than this. When something goes down sharply up, creates a V, and then starts trading down again with volume down where the low was, that's not a good sign.
Right.
That is not a good sign. Okay. Because the psychologists, people are buying it again at 36, 34, 32, and they're going to be selling it at 28, 26. So these are just basic things, the framing that we've been doing, and how I'd like to see everyone start thinking about it in the background before even looking at the options. You should have, as you're developing your idea, you should be framing what the possibilities are, how you see them. It's very, very important. It's very important because it also will, it does two things. One, it helps you with risk reward, but it also stops you from thinking that something's going to go up to 1,000. You're framing something today so that in 2 weeks, the frame doesn't move. It'll move as it breaks through levels. But once these lines are drawn, you can't just say, oh, it doesn't matter anymore. There's news. You have to sort of, if you've done it correctly and you're spotting the highs and the lows, and that's really what you're looking at, the highs, the lows, and breakouts, resistance, support, very simple, then it shouldn't change much, in a week, 2 weeks. It's, things are going to cause it to go up, cause it to go down. And that's where you're looking for when it goes down too much and you framed it and you're like, this is down a lot, as long as it doesn't, why is it down? Maybe it's just the market. If it's just the market that's taking everything down, well, then that's even better because it's giving you a chance. It's almost thinking about Warren Buffett's way of thinking, but in options, using that way of thought in options and leverage. You have your value and you have your risk reward levels. And if the market just happens to go down and it takes your stock down to where you thought it was good before, then that's okay.
Right.
Where it's not okay is if all of a sudden the CEO resigns, and that changes the whole game. Now it's a new stock and you got to really think it. So these are things to help how you structure your trade and how you're thinking about it. And on this UOA, not every UOA is a trade every single day. It's really trying to figure out where the right spots are. Right now, the reason why we're not seeing a lot of UOA is because of why? Because we're right in the middle. We were 372 and we framed it at 405. So we're literally right in the middle, right? And so it makes it a lot more difficult to say, oh, the market's about to rip or it's about to crash. Nobody knows, but I can tell you that, we're trying to position ourselves a little bit more where, if it does crash or if it does go down, some of our names, we're in names that shouldn't go down as much. And I mean crash, I mean a 5% mini crash, 7%. I don't think the Biden administration, which includes Powell as the Federal Reserve Bank, they want this market to crash. So they will be pressing their own buy button when the market's heading down, just like they did at 372. They want things to slow down. But when you have this much for sale coming next Wednesday, it's hard to slow it down. There's hundreds of billions of dollars potentially for sale. Who's going to buy that? I don't know. We're gonna figure that out. Maybe it's the Japanese guy who's selling the bonds. He's going to buy them. I don't know. Okay, so that's NEO. Look, there's NEO put buying. There's NEO call selling. There's every one of these ADRs is call selling generally and put buying that I've seen. PDD, there is call buying, but the stock is getting drilled and they're buying really tiny calls, which tells me it doesn't tell me much. We talked about the chips. What else?
What about EV? I mean, going from NEO, EV, ARK, Tesla, everybody wants to know, I'm sure.
Tesla. So, all right. Yeah. So Tesla. So my views on Tesla, are, let's see. Let's look at Tesla here. I get a lot of hate mail if I say anything bad about Tesla. I'm an odds maker. I call it the way I see it. Right. That's my job is to call things the way I see it. And what I see is, I'm going to show you what I see here. What I see is, I'm just framing it. Let's just frame it. We had a stock that, made a good run here, obviously here, okay, jumped quickly somewhere around here, 350. We got this number right here, 500. Somewhere around here, 575, call it 550. Okay, somewhere around here, I'm going to put it, let's just call it 550. We have 625 recently right here. Obviously, you get the 900, the highs, and you sort of have this, I like this box because this is the way my mind thinks. See that box up there?
Yep.
That's something that, that strikes me as, oh, I want to pay attention here. That means to me there's sellers up here, right? These people would track, they're sellers. Okay.
Mm-hmm.
So that's here. I do see something positive. Was the first positive was this is a V. So there was a rejection at 550, but the market seems like it has another message for this level and it wants to see what it's going to do. Now, if I stick in some of the things that have happened as of late, and as of late, meaning the last 4 months, this was interesting, right? This is an important level here, an important area. This is the S&P 500 ad. Okay, this is people getting in. This is, I don't want to call it artificial demand because it's a reward for being a good company to join the S&P 500 and you get benefits of that. But there is some artificial demand that was created here. Okay, from 400, regardless if they sold EV or they sold pancakes. If you got into the S&P 500 and then you were that big, you were going to get people buying your stock. Okay, so the stock went from 400 to 900. Okay, now the stock is retreating here and it's on the wrong side right now. Okay, I see the 50-day moving average turning. You see this gap here? Gap here was, between the 50-day, the red line and the blue line. It's nothing. It's back and forth. This is a normal stock. When the momentum hits, you see here how the gap between this increases all the way to here. Well, usually that gap tries to come back. These two try to converge and meet. And where that is pointing to is probably somewhere around 600. Okay. By the time this gets up here, this moves down here. Somewhere in the next few months, you will see that this blue and this red probably start getting a lot closer, right? If the stock just hangs around here. But you got this weighing on it. You got this box of people up here trapped. Yes, you got a bullish sentiment. You got a bullish sentiment with this V right here. 625 was tested. There was a little bit of dance over here. Look, there's like 2-3 weeks. They tested it. They tested it once. It rallied through, went down through, rallied up again. So 625 seems to be some level where people see some value, at least in the near term. Well, we're at 643.95. If I want to look at it a different way, I could start saying here 900. This is almost a straight shot. 900 down to 550.
Yep.
Up to 715. So 900 to 550, call it 350 points. 350 points and 715. Minus 715 gets you 715 minus 350 is 465. So 365. Right? 715 minus 350, 365. 365 gets you right here. So it would be this overshoot of this to right here. Can that happen? Maybe it takes another, remember, this is up, all the way up for literally 30 days in a row on the S&P. An unwind like that, can it get to 365? I mean, tomorrow? No. In the next 2 months, I'm not going to discount it. And surely it does feel like they're going to test this market. They're going to try to test this market and see if they can get it down through this 600 again. I think that's how I see it. I see that this market is getting, you see a lot of these names where people are stuck on, let's call it this side, the right side of the mountain, right? When people are stuck on the right side of the mountain, it's not a good place to just, everybody's holding. I'm holding Tesla. I'm holding NEO. I'm going to sell it. If it goes up 50%, I'm selling it. Right. There's a lot of that mentality going on. I hear it all the time. Blink. Let's just take a look at Blink. I mean, these are charging stations. Again, change the world charging stations. But at the end of the day, people start getting nervous about a stock like, let's call it Blink. Sure, there's these people that are holding forever if you ask them, but let's ask them the same question when Blink trades 20 and they're long at 50, and it's not a good feeling to be the guy holding at 20. Remember, people are going to start saying, remember, it came from $6. It was $6 in November. It's 36 now. It's still 5 times profits there inside there. The market, this market is evil, and it's like it wants its money back, right? And it's going to get it back somehow. And it's this side of the mountain. That's all it is. It's momentum, up and down, choppy. And what if this stays between 20 and 40 over the next 4 months before it decides to make another big move? It's a disaster for people trading it. If you're holding it and you don't care, then God bless you, you don't care. But at the end of the day, it's been my experience that people do care. At some point when it gets too low, people do care. And that's the story here on this ARK trade, right? On this ARK trading, you got a stock here loaded. I mean, this is, I want to short all these little guys. I want to find ways to short all these little guys. But at the end of the day, if I can buy ARK, ARKK, they're all going to trade the same. If fantasy is blown up, if people stop saying, you know what, I don't think I want to own a lot of these anymore. You can get these stocks, ARKK can easily trade right back to 95.90 easily. And it would go right with this ABC pattern of, 138 to 105. That's 23 minus 130 is 107. And then remember, when things go down, there's this, potential, like it was here, a 2-day panic move where it could just go right through the 700, the 200-day moving average down quickly and then shoot back up. So these are the way I see it. Tesla, all of these, every single one of them. Zoom, what I call hanging by a thread here. This is a prayer right here. Okay, that's what I call it. This is a prayer. If you're long this and you got great news on earnings and now it's trading for the 3rd time, trying to press down to 300, this is a prayer. This is people holding on, thinking, you know what? This stock is going to go up. When it goes to 450, I'm selling. I'm out. Yeah, but what's going to happen? There's air under here. From here to here, there's basically air, right? 200, and you're talking about 70 points, 230 to 300. So I would be very, very cautious trying to catch the bottom on these types of names. Very, very cautious, like really cautious. It's a tough game to play. You're playing 100 volatility still. Let's see where. It used to be 100. So NEO is down to 80. Where's Zoom? Zoom is 50 now. Okay. Let's go to, so these things are all trading close to every single one of them. So everything has come down, and there's still buyers there. And I think they're hanging, all of them are going to be hanging by a thread. So let's see, Blink and our favorite. Okay. Blink is still over 100, and our favorite, this one from back in the day, which we said the big money guys are thinking the teens on this one, right? They're thinking the teens, and they're positioned for the teens when they're buying $50,000 on the 25 strike call put, and there's 50,000 options, and they're spending $4. They're thinking $15 on Palantir. Okay, not today, not tomorrow, but they're thinking $15. That's where maybe there's, they start getting excited about getting long again. Remember, nobody was excited at 10 and it traded at 42. So, you gotta take a step back and just remember where we are. Palantir is trading 60 vol when it was doing this move over here, was trading 150 vol. Things have changed. The dynamic has changed on these things. Will they go up? Yeah. I think 3-4 months, you got to wait till this thing sort of like plays itself out and digest the same move down. I think that's how you got to look at the world here. So that's my Tesla. I still think there's a lot of potential downside here. The last thing I would say how weak it is think about, this is how I always think about things too. So you could do it yourself. Cathie Wood comes out and says $3,000 Tesla, puts out a model, puts out everything. If she did that in December or January, what would have happened to the stock? Up at least $100, right? Up at least maybe 200, just soaring. 3,000, oh my goodness. Now she says 3,000, it goes up 7%, traded down on the lows. That means the money came out of it and sold it. And then it's been trading sideways to down ever since. What is she going to say? 5,000? The next time she's got to push it higher. You got to go higher, right? You can't go like, I'm going to reduce it to maybe 2. So it's almost the reverse of yelling fraud. A short seller, when he yells fraud, you better hope it goes to 0, right? At that moment, because if it doesn't, then you're getting everybody scared out, and that's it. It's like that you've just shot, you shot your last bullet. Fraud, you can't go better worse than fraud. On the flip side, it's almost like you can't get better than saying Tesla's going from 700 to 3,000 in 4 years. And it's a big statement. So I'm worried about that. I'm worried about everything that we just talked about.
Fair enough. Now let's move on to some more old school car manufacturers like Ford and GM. What do you say? And see what's going on there.
I think this is where people are going to be hiding out. I think the EV story in general, and this is the other thing I don't understand. This whole notion that there's going to be 80 million EV cars in 2025, 2030. I mean, that's great. I get it. The whole world's going to change to EV in sometime in 10 years. But at the end of the day, it's not like GM's not going to make cars, or Volkswagen's not going to make cars, or the guys who are making the 80 million cars today are going to stop making cars. So is there enough room for 50 other EV companies to make cars? I mean, probably not. So they're going to give credit to the people who are building cars already, who are changing their model. So Volkswagen, saying, hey, I'm going to be an EV. We're changing our cars EV. Okay, if they manufacturing cars, okay, I can sort of buy that. They have the factories. They understand what's going on. They've built. They know what it's one thing to build 20,000 cars and put them out in California and be like, yeah, this is awesome. It's quite another to have a worldwide distribution of factories of people. It's just a whole different. It's night and day. So just because you put out 3 scooters that have EV and you're worth $1 billion, like our friends, one of these companies that we looked at in Vancouver, I don't, you're going to be the next GM out of an office in an apartment building. I'm not sure. I'll bet against that. I'm not saying that I'm going to be trying to short this thing on the way all the way up, but on the way on the other side, now you got to prove it with all these stocks. The market is saying now you got to prove it. So something like GM is coming from a place where it is Ford, GM, Volkswagen. They're coming from a place where they have a business. It's already producing millions of cars. Now they're going to take, maybe they issue bonds, they issue stock. They're going to take some money and they're going to literally build out, transform what they have into an EV company. And I think at the end, they're going to be the winners. Now, Tesla is included in that, right? It's already building 5 million cars, or 1 million cars, 500,000 to 1 million cars. So it's starting to understand the hiccups with building 500 and 1 million cars, right? GM has been doing it for 60 years, Ford for 60, 100 years, however long they've been doing it, right? So at the end of the day, there's a lot of sweat in the knowledge of putting out millions and millions of cars each year. I think GM does 6 million cars a year. I think the EV story will transform into Ford, GM, maybe even the Volkswagen, sensors, and EV, possibly to a Sony. If Apple gets into the business, Apple, Tesla, the Neos. I could see Neo in the future. I think China wants one of their cars. China's the leader in everything right now. I mean, the US and China, okay, but China is really starting to hum on a lot of different levels. They want their one brand to become the leader. They want their brands to become world leaders. And so they're going to push. It's my logical reasoning that they will push their EV cars, and they probably stole everything from Tesla already. So Tesla's factory, I mean, they probably got everything already. You know what I mean? Tesla's got their factories there. And then one day they're just gonna be like, nah, just kidding. Like a Jack Ma. Yeah, just kidding, Elon. Yeah, we were friends, but we caught you spying on us. What do you mean? How are you going to prevent someone? All they have to do is one day say, we caught you spying on us, and your videotapes of all your cars are going into some database, and we know that it's being used. You're out. Now what happens to the Tesla story? And then what happens? By that time, Neo is ready, Lee's ready, Li's ready, XPEV's ready, and you got 3 big automobile companies which are issuing making EVs. what happens? I mean, what happens to the Tesla story? So it's just my logical reasoning that China doesn't want Tesla to be, China wants their companies to be the best companies in the world.
Right.
They want to build their brands. That's their goal, is my opinion. That's just my opinion. So what does it mean for all these other ones? Yeah, they'll let McDonald's come in. They'll let Starbucks come in until they got something that does better. So the long-term China story for a lot of these guys, when China becomes a major leader, that's something that I would pay attention to.
Okay. I like that.
Last one, because I don't have that much more time. FNKO, FNKO.
FNKO.
NFT. We've been talking about NFT and the Twitter and whatnot. So NFT, here's something where this guy, the CEO, I don't blame him, but the CEO comes out. You got my screen?
Yep.
So the CEO comes out and says what? He says, okay, stock's pulling back. It was at 25 earlier today. Okay, stocks through the roof here in the last 2 weeks, 15 to 25. I didn't know this company. I saw it on UOA today on the board, and they're buying calls like they were going out of style. So what the CEO said was, let's just take a look. The CEO said, as website toynewseye.com reported yesterday, FNKO CEO Brian Mariotti just revealed in an interview, that FNKO wants to be, quote, wants to be out in the market for NFTs fairly soon, he says. He aims to tie digital NFTs to our fan base and link entities with physical products. Wow. That sounds really interesting, right? Except the problem is it's a certificate. What they're doing is it's simply somebody's like, it's a certificate. Think about this. NFT is about having something like a virtual art online, right? So when you have your virtual house, you can show people your virtual house. When you have a virtual friend, you can play with your virtual friend online, okay? What he's saying is that, yeah, we have collectibles and we're going to tie it to whatever, baseball cards. They already have that. They when you have a baseball card, a collectible, right? And a baseball card, rookie card, Michael Jordan worth however many millions, right? Ranked 10, graded 10. If you had that card, you have to actually send it out to get it graded, and it gives you a 9 or a 10 or something like that. If you get a 10, it's like mint condition and it's worth a lot of money. I think from what I'm reading, they are trying to build this blockchain around collectibles. It's a lot different. A blockchain is just an accounting system. At the end of the day, yes, it's digital and whatnot, but it's an accounting system. It basically says this baseball card is owned by this person because we have the digital. There's a digital imprint on the back of the baseball card now, and we know, and that's it. So it's an accounting system. So the people that are grading baseball cards, when you get your baseball card back and it says 10, and now you could sell that baseball card for however many millions of dollars, it also has a serial number. And that serial number is then tracked by the company. It's an accounting system by the company for physical things. I'm not sure I get this whole, we're going to do this blockchain NFT type of token that's going to take into account physical things. It goes against, in my mind, anyway, I could be completely wrong, but it goes against what the whole point of the NFT is, that it lives virtually. Art is virtual. So that's my 2 cents. I would be careful about the FNKO, but you know what? You know what I'm going to say to make sure everybody understands? We're on a certain side of the mountain here still. This is a building mountain. I'm not shorting this stock. I wouldn't try to short this stock because, as you've just learned over the last couple of years, over the last couple of months, these stocks, they can go up with a good story. They can go up 3, 4, 5 times. Okay. Yep. And with people pushing it on calls and whatnot, this board right here reminds you of what? Reminds you of every other one of these little EVs when they first got the SPACs, 160 vol, 128 vol. This is how they started with all the other names. So I'm not saying that this is the top on FNKO. I'm just saying, somebody help me or help explain to me how that's just a certificate. You're just getting a certificate that you're keeping track of it online on a blockchain. Why is that right. worth? Let's just see how much the company is worth. I'm going to get hate mail on this one too. I know, I can tell. Oh, so the company's worth $1 billion. So why is the company worth 20%. Why is the company worth $250 million more, or $200 million more today than it was yesterday for some guy saying NFT? That's going to be the new thing.
Wow.
So everybody's going to come out and start saying, oh, we're going to do EV cars in China while we trade through Futu, and we're going to put the whole thing on NFT. Boom, stock goes up double. You know, I mean, like, you know, this, look, at the end of the day, I have no idea where it all ends, but you know, I would be vigilant in your assessments of the future and what it looks like, not just revenue margins. We talked about the DraftKings. You know, being smart means you got to be skeptical too a little bit. So being skeptical. So am I a skeptic? Yeah, I'm board skeptic. I grew up in the projects in Queens. You know, I'm skeptical. Right. So at the end of the day, you know, show me the goods, show me what I need to know. Show me the, you know, when I'm looking, Sony, for example, when I look at the company, they're the leader in sensors, high grade sensors. This anime business is good. Like, that's real. Okay, I get that. And I understand PlayStation because I have PlayStation. I bought PlayStation and I like playing it with my son. These are real things. And I think at the end of the day, when you can count the widgets, those are very good. So that's my 2 cents. I ranted for about an hour. Hopefully everybody got a little bit out of it. The market's hanging on a prayer here. I think we have a big event coming in the next 5 days. And remember, I showed you on March 23rd, it takes 6 days. It took 6 days for them to buy it, and the market screamed up a lot. You know, we saw yesterday afternoon, just take a look at bonds. Bonds got bid. The SPYs started going down. I would look at that relationship, keep that relationship tight, watch that on the side. Bonds bid, SPYs down. That means someone's in motion trying to piece together this very large picture that should be transpiring in the next 4 or 5 days.
Awesome. I love it.
All right,
Thank
man.
you, Felix.
All right, cool. I gotta go.
Thanks, everybody. Make sure you like the video and subscribe if you haven't, and we'll see you tomorrow.
Thank you, guys.